Welcome back to Stocklabs Market Recaps. We just finished the first week of sell in May and go away. So May 6th was Friday. And the indices kind of held up pretty decently as far as, I guess, if you look at the S&P and the Dow closed kind of barely below flat. NASDAQ again was a bit soft, but not as bad as some recent weeks. So, yeah, like I said, S&P down 13 bips, Dow down 17 bips. So, I mean, in this environment, we're just going to call that flat. Q's down 1.2%, sort of continuing to bleed out following some of the big tech earnings that we've had recently, last couple weeks. And IWM down 130 bips. Small cap trade was falling apart sort of before the other indices were from last. I think we topped out last November. Has never really gotten any sort of momentum back. The other indices took a little while longer to start deteriorating, but yeah, this IWM trade has been not doing a whole lot anyway. Bonds completely taken apart for the week, down another almost 5% on TLT. We had the FOMC meeting on Wednesday, and yeah, I mean the bond market has basically decided that it's not gonna change how it's behaving until the FOMC sort of reverses course. So as long as the FOMC's got this idea that they're going to keep raising rates all the time, just expect TLT to continue to bleed out, which is going to cause problems. It's going to keep causing problems for the major indices, being that the major indices are so tech heavy, and a lot of the tech trade is tied up in rates, especially longer term rates being low as opposed to moving higher. So, bad move for the bond market this week. Actually, it's surprising that the NASDAQ even held in this well with rates just continuing to ramp to the upside. So, as far as breadth on the breadth that made up sort of the performance was pretty soft under the surface. I mean, healthcare continues to be bad. Tech, obviously, the NASDAQ was only down, 1.2%, but the median tech stock was down something like 3%. So anything under the surface is sort of getting hit. Services down 2% and consumer down 2%. Best performing sectors, there were a couple, the oil trade has sort of found its footing a little more, up 7%, 6%, depending on the specific subsector. But yeah, not a whole lot, up 5%. There's only, 4 here. Downside, we still have this side of the list, being a lot more populist than the other side. I mean, all of this stuff. There's actually not really a clear pattern here. Well, okay, the gold stocks got hit again. They got hit hard the week before, I think, as well. Chinese stocks still not really doing anything positive to the upside. I think Alibaba several weeks back was starting to bounce a bit, but the Chinese burrito trade has not been kind. It's kind of mirrored the biotech trade. I mean, they fell apart around the same time and have never really gotten back to moving steadily to the upside. App software, SaaS down 5%, so that's bad. That's bad week for software stocks. Now the software stocks have been doing poorly with the Nasdaq. Obviously, a lot of them are sort of beta trades on the Nasdaq, and then depending on which specific SaaS company you're looking at, a lot of these are, they're not profitable companies. So they sort of um, depend on this environment of cheap credit and low rates and all of this stuff in order to even price in like their survivability going forward. So when all of that comes into question, this sector is going to be just filled with landmines of stocks that are may or may not be surviving. So they're just getting marked down, to go from something like 50 times sales to, okay, maybe this business won't survive. I mean, the stock's going to be down like 90% at some point. So that this has sort of been playing out in SaaS for a while. I mean, this was just a bad week for them. Our bigger leadership stocks from that make up the market. I usually do this before the subsectors. Okay, Facebook, Google, Nvidia positive on the week, so I guess that's good. Although Facebook, this had gotten back up toward 215, 220, on the ramp following its earnings, so it's dropped off a bit, but maybe it's basing out around this 200. I don't know. And then Google up 1.5%, although Google saw some major selling before, and it looks like Google has sort of another leg down overall to do, even though it had positive week this week. Apple basically flat with the market. Tesla also flat-ish, down 0.4. Microsoft down 8.9, and the outlier poor performers were Netflix and Amazon. So I think last week we said that consumer discretionary was sort of slated for a bad week, and Amazon's the biggest component in consumer discretionary, XLY on sector spiders, and Amazon had the worst week of them all. Now the Netflix trade has completely fallen apart, down to 180 and down to an 80 billion cap. So down 5 billion cap from last week, like we were sort of highlighting. Jump into screener and see what the breadth looked like on a market cap basis, just to see if there's any sort of rotation happening. Okay, down 160 bips on 1 to 5 billion, 5 to 10 billion, down 170. So down 150 on 10 to 50 billion. So really pretty poor overall so far, below $50 billion cap. 50 to 100 billion positive, almost 0.3, and over 100 billion cap up 0.16%. So slightly better than for stocks over 50 billion cap. It was slightly better than the S&P and the Dow. Things below 50 billion cap basically struggled anywhere from 150 bips to 170 bips to the downside. So that's much worse than the S&P or the Dow, but mainly in line with the Russell. So there's a clear disparity between things that are over 50 billion cap, so mega cap stocks. You could say that they they hung in pretty well. Now the overall indices still printed negatives because the very largest stocks, like we saw in that leadership watch list, they're all still getting hammered. But maybe there's a chance that some buying is going on. A little bit of buying has started appearing in other sectors not related to some of those large tech stocks, but large companies elsewhere in the that represent other parts of the economy are maybe finding areas of interest for some people. Um, is all I would really base off of that. Intelligence. Okay, banks bullish and gold miners bullish for this week, although pretty sparse again on upside upside rated ETFs. And as for downside, quite a bit more. So emerging markets bearish, or let's flip this around. Okay, crypto industry innovators bearish. Okay, so this is the opposite of the GDXU ETF. So it's good that sort of the bullish ETF is rated bullish, the bearish ETF is rated bearish. That that you can sort of count that as a bit of a confirmation that both sides of the trade are printing the same thing as far as expectations for the week. Ultra short China is bearish. So bullish China, digital revolution rated bearish. So that probably goes hand in hand with this crypto stuff. High beta bearish. And I'm not sure what goes in. I'm not sure what's still in this high beta ETF sector. It used to be a lot of oil and gas stuff. Small regional banks, things like that dominated this high beta ETF, but I have to check what the makeup of it is now before sort of determining. Okay, blockchain rated bearish. Ultra financials rated bearish, which is kind of different from because we had fasts on the bullish side, so that maybe there's a little bit of a conflict there somehow. Meme stuff, meme ETF. I mean, I would never even think to buy this, but rated bearishly for this week. And yeah, like we said, EM rated bearish. So a lot more bearish stuff than bullish stuff, although some of these are bearish. This is a bearish ETF, but yeah, a lot more bearish stuff than bullish stuff again. So we'll just have to see. It looks like for the market, we got down pretty close to oversold again on Friday. So again, this was the Fed day, big ramp, big squeeze on Fed day. Gave it all up immediately on Thursday, and then kind of was a wild session on Friday, but the oscillator got a little closer to oversold again. So we'll see if we can get some sort of oversold signal early in the week. And then we can sort of look for maybe a midweek bounce. And for the end of the week, the closes for the weeks have been terrible all year. So wouldn't get too excited even if we do bounce midweek, unless maybe it's a part of an oversold signal. Maybe we'll see if it's going to stick a little better. Kind of depends what the makeup of the bounce looks like at the time. We'll see. But overall, yeah, I mean, the market under the surface, it was another week of selling, but the headline numbers on the indices, they hung in a little bit. So if you're only looking at that, not too bad, but overall, still pretty weak, and hasn't shown any signs of market hasn't shown any signs of wanting to change its posture really. So we'll keep an eye out for oversold signals. Obviously, trading in and out each day, anything goes. But for sort of a swing picture or maybe a longer term picture through the summer, we're in sell in May, so you might expect a bigger sell to come for this month. All right, that's all from me. Hope you're all surviving out there and doing, hopefully some of you are even doing pretty well. So thanks for checking in. Be back next week, and talk to you then. Bye.